Trade is in no way close to getting resolved right now with China. This is the biggest trade conflict that we have in the markets right now. But it seems as though markets just don't care. What trade war is what I hear all the time. So is trade really a driving force behind what's happening with markets today?
We do think trade is affecting the markets. It's just that it's not the tariffs on a day-to-day basis per se, and it's not the effect of those tariffs per se. It's really the uncertainty that it's casting over the markets. And, keep in mind that the markets reacted very negatively to trade tariffs and the escalating trade tensions with China several months ago. And so what you're seeing now is really a lot of that having already been baked in. Yesterday, for instance, the actual numbers not being as bad as many expected, you see a market pop. And so it's really about what's baked into the market and the uncertainty that it's creating for investors rather than the actual effects of the tariffs.
James, what is baked into the market at this point?
So it's hard to say. Eunice right now was just talking about what the Trump administration is trying to achieve. And I think investors are still trying to figure that out. Are the tariffs themselves a means to an end in order to get China to open up, in order to have them behave better around intellectual property? Or are they the ends in and of themselves in order to extract some sort of revenue from the trade that we do with other countries? Investors are still trying to figure that out. Our view is that over the long run, we expect tariffs to be here to stay. We do expect a higher level of tariffs than what we had in the past, but eventually this will stabilize. We'll reach some sort of agreement. It may take some time to get there, but once that happens, the markets can then adjust to that environment, and earnings, growth can pick up again. The things that drove the markets up to this point can continue. You
have a lot of institutional clients, money managers, those types of folks out there. What is the number one concern that they have with you? What are they asking you for when they come to you saying, hey, James, help me out with this? What problems are you solving for them given the market conditions right now?
It seems that most investors agree that even if trade tariffs, even if worst came to worst, this is probably not something that would spark the next recession or derail completely the bull market. So really the question is, what is the ultimate impact of this? And we think it's in some ways similar to what we saw with the market reaction to tax reform. Investors almost reacted in too short-term a manner to tax reform. They treated it as almost a sugar high, when really it's almost like an exercise regimen. It's something structural that should affect the U.S. economy and increase the growth rate going forward. Tariffs are almost the opposite. They should not have a short-term effect, but it should be something that has a long-term impact on the U.S. economy. So right now, investors are just trying to figure out what the short-term effect is over the next few months. But really, if we do have tariffs, it's something that would decrease the growth rate potentially. It's a net negative for the world. And so really, it's other things that would have to offset that in order to improve the market outlook.
All right, so medium and longer term, the big focus for a lot of those investors out there.
That's right, yeah.